So let's talk about the second question. Is vacation rental demand going to turn off? Or is the supply and demand balance going to shift in against your favor right after you buy a property in a new market that you may not be familiar with? You may not have even visited the market that you're considering investing in. And the real question, the underlying question here is, am I going to make a good investment, and will this make money? Um, and it's a good question to be asking, and we should be considering both the supply and the demand side of that equation. And that's where it's important to have kind of a fundamental understanding of the underlying trends and data that are serving what's going on in the market that you're evaluating. So in the context of North Georgia, for example, you want to be looking at population growth, both population growth in the actual market itself, but perhaps more importantly, in the markets where guests tend to come from. So for North Georgia, that is the Metro Atlanta area, and it's also Florida, and it's the other surrounding metros that feed into the North Georgia market as a place where those folks go to get to the mountains for a weekend or for the holidays, or to take a week as a family and get to the outdoors. And so that's an example of something you want to look at. Is demand going to be sustained by a growing population? And population growth happens as a result of many things, but some things to consider is the local legislation. It's looking at friendliness towards new development. How friendly are those areas for jobs? Are companies opening up offices in Atlanta, for example? And I, having grown up in North Metro Atlanta area, have seen that this area continues to grow and has grown for decades, and has been arguably, in some ways, an underrated place in terms of its steady, consistent growth and the amount of jobs in the tech sector that have found their way into Atlanta, and the diversity of employment, as well as the general migration from the Northeast and the West moving to the South broadly, and specifically to the Metro Atlanta area and Florida. Which again, as you look at the North Georgia mountains, in my experience and the experience of my clients, generally the guest pool is made up of perhaps 50% Metro Atlanta folks that are driving up an hour to an hour and a half to get to the closest mountain market, and then another big chunk of the guests is coming from Florida, where you have a lot of population who are just trying to get up to the mountains, and the North Georgia mountains are the first mountains that they can get to, and perhaps a more luxury, nicer experience than say a Pigeon Forge. They could also get a nice experience in the North Carolina mountains, but they're gonna have to drive a little further, right? So those are the things to be looking at: population growth and migration patterns towards both the market that you're investing in, as well as the employment and legislation and tax incentives and all sorts of things like that. And if you can't tell already, I feel that the Southeast in general stands to benefit from the past few years of migration patterns and job growth and economic strength, population growth. And I also think long term, it will be sustained. And so that's half the equation. That's the demand side of things. You can also look at demand more specifically as it relates to short-term rental demand, or even specifically like Airbnb demand. And my personal belief is that we're still very early on the adoption curve for short-term rentals. And if you look at like a standard adoption curve, it goes like this, right? And so you have your early adopters, and then you get into the early majority, and the late majority. And I don't think we've really gotten too far into the early majority yet. People are starting to The average person is starting to feel comfortable traveling on Airbnb. The early adopters are starting to get more used to traveling multiple times a year on Airbnb. Millennials are growing into that travel family age where they're booking more Airbnbs and have more disposable income. And then you look at things like remote work, which has led to longer term kind of travel for months at a time or weeks at a time while still being able to work. And then you have this aging population that is maybe looking to move around and get to the beach for a month in the winter months, or to Georgia, or people wanting to be close to family for periods of time. And so I think you have, and just a general adoption towards more technology and other types of travel outside of hotel travel. So my belief is that we're still very early on the adoption curve for short-term rental Airbnb travel, and more money, despite any economic cycles, is going to continue to pour into this world. Now, another thing that I just mentioned is economic cycles. And so you could look at the current environment that we're in. Again, it's December 2022. There's lots of fear in the market, just the whole world and the whole economy. But what we've seen over 2022 is that demand for short term rental travel has still been pretty consistent. It hasn't been quite as strong or kind of bananas as it was in 2020 and 2021, and lots of people were kind of claiming that the sky was going to fall in the short-term rental space, and still are. But we've seen year over year demand continue to increase. And if you historically look back at 2008 and other, the pandemic and of 2020, what you saw is perhaps travel to fly to destinations, or European travel, or cruises, Hawaii, things like that. That certainly contracted, but people still want to get out. People want to get away from their homes. They want to get together with their family and friends. And so a weekend in the mountains, a weekend to North Georgia from Metro Atlanta is still something people are going to do, even if their budget tightens up. And in fact, we might this sort of travel might actually capture some of the demand that spills down from those more expensive flying types of travel. So in many ways, you can look at the demand of vacation rentals and short-term rentals as somewhat recession resistant. Now, within that, you have to consider your specific property, the market you're in. Are you luxury? What size is your property? And so there are other considerations, but broadly speaking, demand has some things going for it. Now, I'll quickly shift to the supply side of the conversation, which is looking at, okay, if in any given month 1,000 nights are booked in your market, and there are 15,000 vacation rentals, then the supply demand balance is very out of whack, and that means that all of the hosts are going to be splitting those 1,000 nights, and you're going to run into everyone competing on price and bringing their rates down, and that's where you could find yourself in a supply side kind of issue, right? So then you have to look at the supply side factors. How fast is new development happening in the area? Are there constraints around new inventory coming onto the market? Are there lots of builders? Is development slow? I might have already said that. What is the trend line of new rentals coming into the market? How hot or popular is that particular city or region, right? So those are all things to consider, and then look at, and obviously that's kind of like high level stuff, but you can actually dig into the data and go look at things like, if you Google search airdna rental numbers in XYZ city, you should be able to find a list of rentals. If you go onto a tool like data.rabbu, or you actually just go onto Airbnb and start looking at calendars, you can get a sense for nightly rates, gross revenue projections, and you can start to see how much revenue are these properties anticipated to get, and are they struggling because the supply demand ratio is off. And you have to be careful there. This is a whole process, and I'll get into this more in other videos. And if you're working with me as a client, I'll share with you some of my strategies for analyzing rental revenue. And it is a process, and as the investor, you need to own that process and understand your numbers. But definitely want to be looking at kind of getting into the granular data property by property. And then you also want to zoom out and look at the underlying trends and demographics and population and income. There's a tool called if you Google Big Radius tool, where you can look at a particular city or county and see the average income, see the population trends, and how those things are moving. And again, another example of something you might want to look at: cities and counties in the Metro Atlanta area, and try to get a sense for disposable income, population growth. And if the population growth is happening in Metro Atlanta, you can bet that more people are going to want to buy and stay in cabins up in North Georgia. And so you start to look at those kind of underlying trends and then make your investment decision. At the end of the day, it's going to be very difficult for you to anticipate every possible factor and thing that might go wrong. And so that's why it's important to work with someone that understands the market deeply and is actively engaged in the market, both on the buying and selling side, but also on the management side and investing side. And so, of course, as you work with me, I'm in the weeds. I'm talking to management companies. I'm talking to managers and other owners. I'm in the Facebook groups. And I encourage you to do all those things as well, and you'll be okay. You'll make a good decision. The last thing I'll say on this note, and I'll probably reiterate this in other videos, if you haven't heard me say this already, you should really consider, as you're asking this question of like, am I going to make a good investment, is what is your time horizon for evaluating whether or not you're making a good investment. And I challenge you that if you're thinking about it in a 1 year, 2 year, 3 year time horizon, you're probably not mentally prepared for this type of investment. And you might need to reconsider that as you think about this, because you might experience some short-term constraints. A bunch of people might get excited about, and you'll see 100 new cabins come onto the market, and it might squeeze the demand. It might spread out the bookings across an extra 100 hosts. But if you believe, if you're zooming out and you're looking at the big picture and the underlying factors, and you see the demographic trends going your direction, you'll and you zoom out and you look at it like a 10, 20, 30-year investment, chances are you'll be in a good spot if you zoom out and you look at the big picture and you buy with those important questions in mind. So I encourage you to do that, but it is important to be thoughtful about supply demand. And if you do those things, you'll be okay.